Hey there, I'm Jeff Spolstra with Summit Mortgage, and welcome back to Mortgage Points. In this video, I'm going to explain how credit scores work in the loan qualification process. Credit score is important. It's not the ultimate number that decides what's qualifiable and what's not, but it does have a big impact. So let me go over a few things. First of all, let me show you what credit scores look like when I get to see them. Okay, let's take a look at some scores here. This is fictitious borrower and co-borrower from scores from TransUnion, Equifax, and Experian, the three credit reporting bureaus. We get a score from each one of them, and I get asked all the time, what do we do with this? Well, we don't average them. What we do is we're going to take the middle scores. So these are the two middle scores, or the scores that are in the middle between all three for each of the borrower and the co-borrower. And then what do? Do we average those? No, we don't average those. We take the lowest score, which in this case would be 745 from Experian for the co-borrower. Why do we do that? Because we're looking for the most risk-averse score. We're not looking for the most optimistic score. We're looking for the most risk-averse score. So the low score wins, 745 for this particular borrower. Now, a lot of people will say, how come Experian tells me or TransUnion tells me my score is 780 and you're telling me it's 764? Well, there's a reason for that. You don't actually have one score with TransUnion. You actually have 7 scores with TransUnion based on differing levels of risk. The most risk-averse score is and I'm just throwing fictitious numbers in here. I'm going for the second most risk-averse score. There is one that's even more risk-averse. That's typically for government use. And the 780 that you see on your credit reports or your bank statements or from your TransUnion app, this is the least risk-averse score. So this is the one that credit cards that don't care if you're doing anything other than breathing are going to look at to see if they'll give you a credit card. So that's why there can be a difference between what you see on your app and what I tell you I'm looking at, because I'm going for a more risk-averse score. Now, it's not just that TransUnion has that. All of them have different scoring levels. So any one particular person can have up to 21, 7 times 3, 21 different credit scores. So just be aware that the numbers you see, I'm going to probably get a lower number. It's going to be equal to or lower than the number that you're seeing. Now, what do we do with this? Well, I showed this chart before where we're looking at on the how to determine an interest rate. We're looking at the impact of credit score and loan to value or down payment on what that means in terms of your interest rate. From a base interest rate, what do we do from there? So if your qualifying score is in the 740 to 759 range, and you're putting 20% down for an 80% loan to value, that's going to be an addition of about 7/8 of a percent to your base interest rate. So this is the importance of credit score. This is how it's used kind of up front to determine what sort of a range you're in for interest rates, and then we add on a bunch of the other factors that I talked about in a previous video about how we determine interest rate. So it's important to remember that we use the middle score, the lowest middle score of all of the borrowing parties. So I get asked a lot, can I improve my qualifying credit score by adding a co-borrower or a co-signer? The answer is no. You can add a co-borrower and co-signer, but if your middle credit score is still lower than theirs, your score is going to be the one used for qualifying. So you can't add borrowers or co-signers just to raise your credit score for qualifying. You can do that for providing more assets or for providing more income or stuff like that, but adding co-signers and co-borrowers is not going to improve your qualifying credit score. So anyway, this has been Mortgage Points. I'm Jeff Spolstra with Summit Mortgage, and I'll see you next time.